What's up guys, it's James Allen, the Out-of-State Investor, and we've been seeing a serious change taking place in today's housing market. Across the nation, we've been seeing price cuts growing, housing transactions crashing, inventory levels surging, and price declines taking place across the nation. Now, some cities are seeing these effects worse than others, and that's what today's video is all about, the 10 housing markets that have already started crashing. Now, these are markets you really want to think about twice if you're thinking about buying a house in one of these markets, with price declines already for many of these markets well above the national average. But before I get started, a quick word from today's video sponsor. If you're looking for some of the best landlord insurance or insurance for your condo association, then you definitely need to check out Honeycomb. Honeycomb is the only insurance provider that offers an all-digital, fast, and affordable coverage. Now, what differentiates Honeycomb is they have a state-of-the-art technology that allows them to analyze a property and instantly provide you with an insurance rate. Now, you're going to answer a couple of simple questions, but in less than 5 minutes from start to finish, you'll get yourself an insurance quote. Now, you might be wondering, well, what type of properties are covered with this type of coverage? Well, Honeycomb covers everything from single families all the way up to medium-sized buildings, and their coverage is top-notch with their policies rated an AM Best Excellent, which basically just means that you have nothing to worry about as far as financial stability with their policies. Now, what sets Honeycomb apart from its competitors is their rates. Their rates are very low compared to their competitors. In fact, sometimes up to 40% lower than their competitors, and that's keeping the coverage levels at the same level. So if you want the best bang for your buck, you want to save money while maintaining strong coverage, then I highly recommend checking out the link below to Honeycomb to get your insurance quote right now. And with that said, let's get back to the video. Now, starting at number 10, we have the market of Dallas, Texas. Now, Dallas, Texas was one of the most sought out places to move to during the COVID pandemic. We saw massive migration taking place towards Dallas, and as a result, we saw annual appreciation hit points of over 24% year on year. Now, that was at its peak appreciation. Now, Dallas is starting to see a whole different type of housing market. Price drops have grown astronomically, starting to see 11% weekly numbers. We multiply that by 4 to get the monthly, seeing about 44% of all active listings experiencing a price drop of some kind. Inventory has already grown from 5.3 weeks of supply we saw earlier on in the year up to 11 weeks, more than doubling the amount of supply on the market. And as a result of that, we've seen house prices decline 7.1% from the peak. And based on the data we're seeing, we're only expecting that to continue to decline further, but not nearly as much as the next market on our list, which is number 9, the Phoenix, Arizona market. Now, Phoenix has changed more than most markets in the past couple of months. Now, although prices have only gone down 5.1% from the peak, the underlying foundation of the Phoenix market is really starting to crumble. Over 58.4% of all active listings are experiencing a price drop of some kind, and a big part of this has been these iBuyers that have overbought specifically in the Phoenix market. For instance, Opendoor. Did you know that Opendoor owns over 10% of all active listings on the market? They have over 1,400 houses, and they've been able to flood the market trying to reduce the amount of inventory they have. As a result of that, we've seen inventory starting to pile up on the Phoenix market. We've seen it go from a low of 5.5 weeks of supply earlier on in the year to over 16.8 weeks of supply, currently over triple the amount. Transactions are also crashing in the Phoenix market, with homes sold down over 32% year over year. So although prices have only declined 5.1% so far, we can definitely anticipate that Phoenix is going to start to move way further up this list as we go further on in the year. Now, housing transactions as a whole has been going down. We've seen the latest report from the National Association of Realtors showing that homes sold is down over 20% year on year. But the interesting thing about this report is that from June to July, we actually saw home sales drop a total of 5.9% just month on month. So this has been affecting a lot of cities nationwide, but not many cities have seen transactions go down as much as our number 8 city, which is the city of Provo, Utah. Now, Provo Provo has already seen home sales go down over 35% year on year, and as a result of that, we've seen the inventory climb from 5.6 weeks all the way to 14.9 weeks of inventory, close to tripling the amount. As a result of that, we've already seen prices drop over 6% from the peak, and just like Phoenix, Provo seems to be just getting started. For instance, we're already seeing over 59% of all active listings seeing a price drop in the Provo market. We're also seeing median days on market. This is how long the houses are staying on the market for, go from just 7 days on market to over 23. This is a telling sign that house prices are going to continue to decline further, as these are the initial warning signs you want to look for in a housing market. And one of the housing markets seeing median days on market surge more than others is Reno, Nevada. Now, Reno, Nevada is known as the biggest little city in the world, and it's well known for its casino and tourism industries. Well, so far in the Reno market, things have slowed down drastically. The median days on market have slowed down from 16 days to now houses are sitting over 38 days on market. We've also seen that over 46% of active listings are seeing price drops of some kind, and we've seen inventory levels spike from just over 6 weeks of inventory to almost triple the amount at 18 weeks of inventory. All of this has caused prices to already decline 8% from the peak, and there's additional concerns as we've started to see the unemployment rate rise in recent months. From March to June, we've already seen it go up 0.7%. Now, it's still at a healthy rate, to be fair, and it's still sitting below the national average, but as the national average has gone down, we've seen Reno go up. But one of the markets that is sitting above the national average in unemployment levels and continues to go up as well is our number 6 market, and that is Las Vegas, Nevada. Now, Las Vegas, Nevada has had higher unemployment throughout the pandemic and their recovery compared to the rest of the nation. Currently, nationwide, we're sitting at a 3.5% in unemployment rate, and that is historically a great rate, sitting at the best rate since around 1969. Now, Vegas is currently sitting at 5.7%, significantly higher than the nationwide levels, and it's gone up significantly just from March to June. It's already gone up from 5% to 5.7%. So again, as the nation's trending down, we're seeing Vegas trend up. Now, in Nevada as a whole, between Reno and Las Vegas, we're already seeing mortgage applications go down drastically. They're down over 34% year on year, and that is the lowest levels of mortgage applications in over 22 years. Now, this has been killing the level of housing transactions we've been seeing take place in the Las Vegas market, with homes sold down over 38%. Houses just continue to sit in this market. We've seen median days go from 14 to 29 days. We've already seen prices decline from the peak over 7.5%, and they seem primed to continue to decline, especially with the way we're seeing the inventory pile up in the Las Vegas market. We've already seen inventory spike over triple the amount from just 6 weeks of inventory earlier on in the year to now sitting at over 20 weeks of supply. Now, although the price declines are pretty significant in the Las Vegas market and well above the national average, they got nothing on the next housing market on our list at number 5, which is the Seattle, Washington market. Now, with Seattle, Washington, we've already seen prices decline, and I'm talking about the median home sales price decline over 8.1% from the peak, and that doesn't even tell the whole story, because on a price per square foot level, we've already seen prices decline over 10.3%. Now, contributing to these price declines has been the massive amount of inventory, and I don't mean from a numbers perspective, because the number is actually not that high as far as the amount of weeks of supply, but the amount of growth that has taken place has been exponential, as we've seen it go from a low of 2.2 weeks of supply, which nationwide, it's been one of the lowest amount of supplies all over the nation, and it's gone from 2.2 weeks all the way to 9.9 weeks, almost 5 times the amount. It's actually at the highest levels of inventory in almost 4 years, and in addition to that, we've seen housing transactions completely collapse. Home sales are down 34%. Pending sales are also down 35%, showing that continued pattern of home sales and housing transactions as a whole just collapsing. Now, although mortgage rates has definitely played the biggest role in terms of affordability, which has been slowing down the market nationwide, the other factor with Seattle is inflation has been hitting Seattle more than most cities in the nation, as it was ranked the 5th city seeing the most inflation in the US. Seattle's seeing over 10.1 8.1% annual inflation compared to the 8.5% felt nationwide, and so that only contributes further to consumer costs going up and bringing more buyers out of the market. Now at number 4, we have one of the hottest destinations in all of the COVID migration surge we saw, and that is the Boise, Idaho market. We've seen prices skyrocket in this market as a result of this significant migration taking place. At some points in time of 2021, we saw up to 40% annual appreciation. Well, as the famous saying goes, what goes up must come down, and that's exactly what we're seeing right now happening in the Boise, Idaho market. In fact, it's actually quite interesting what we're seeing take place, because right now in the nation we're seeing new listings go down mostly, but in the Boise, Idaho market we're seeing the complete opposite. New listings have been surging and homes sold have been crashing, and as a result we're seeing a massive pileup of inventory. We've already seen it go from 4.7 weeks of supply earlier on in the year to over 15.6 weeks of supply today, over triple the amount. Boise has also seen more significant price drops than any other city in the nation, with over 68% of its active listings seeing a price drop of some kind. So with that said, we've seen over an 8% price decline from the peak in the Boise, Idaho market, and with new listings up over 55% and homes sold down over 39%, we're seeing that mismatch take place that's going to continue to build up inventory in the future, which will only contribute further to more price declines in this market. Now, another COVID hotspot destination that makes the number 3 spot on our list is the market of Austin, Texas. Now, Austin has already seen some of the biggest price declines nationwide, with the median home sales price already down 10.1% from the peak. We're also seeing the amount of inventory surge, which we know supply and demand plays a huge role in real estate prices, and we've seen it go from as low as 6 weeks of supply on the market up to over 19.6 weeks of supply, again more than tripling the amount. And in addition to that, we're also seeing price drops grow at a significant rate. In fact, over 50% of all active listings are seeing a price drop of some kind, and so because of that, along with the inventory piling up, we can only anticipate further price declines over the next year for the Austin, Texas market. But even Austin, Texas has not seen the type of price declines we've seen with our number 2 market on this list, which is the market of San Francisco, California. Now with San Francisco, we've already seen prices decline over 12.3% from the peak levels, and houses in San Francisco are just sitting for longer periods of time at this point. We've seen the median days on market go from as low as 11 days to over 24 days on market, and as a result, housing transactions are crashing in this market, down over 27% year on year for homes sold. Now, although inventory is increasing in this market, we're not seeing the kind of increases in San Francisco compared to some of the other markets on our list, like your Boise, Las Vegas, Austin, Texas, Phoenix. And finally, we have the number 1 market on this list, and that is the market of San Jose, California. Now, so far, San Jose has seen the biggest crash in housing prices taking place across the housing market, with the median sales price already down over 13.1% from peak levels. This is the most we've seen out of any of the markets nationwide, and in addition to that, we've also seen housing transactions completely collapse in this market, down over 42% as far as homes sold year over year. So this sums up essentially the top 10 list of housing markets that have already started crashing. Now, although this is the order for the ones that have already started crashing, it doesn't necessarily represent the order in terms of which housing markets will crash the worst. Although we're seeing the prices decline the most in the Bay Area, I personally believe we're going to see more significant price declines in the markets where we're seeing lots of price drops, the inventory growing the most, the median days on market grow the most, and that would be markets more like Boise, more like Las Vegas, more like Phoenix, and Austin, Texas. So with that said, I hope you guys enjoyed today's video, and if you did, do me a favor and support the channel by smashing that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. Also, let me know in the comments below, which housing market do you think will have the most significant decline in house prices? Finally, follow me on Instagram and TikTok at The Out of State Investor, and if you enjoyed today's video, I'm going to highly recommend you check out one of these other 2 videos over here. And with that said, I'll see you guys on the next one.